You know, I never would have expected to call $300 luggage cheap.
Get fiscal, get fiscal.
Coach Incorporated, N-Y-S-E-C-O-H, bills itself as a marketer of fine accessories and gifts for women and men. So not you, Jamie Lee Curtis. What they really do is sell high-end luggage, handbags, and other luxury accessories. And right now, the stock is looking hella cheap. Guess which coast I'm from? On Friday, it closed at 1763, which is pretty close to its 52-week low. Coach is posting a P/E of 7.95, ROE of 46%, and a PEG ratio of 0.56. Now the price to book at 4.69 is a little higher than you'd like in a typical value stock. But a company like Coach isn't going to have a lot of assets on its books beyond inventory and store property, so 4.69 may not be so bad, but it's not exactly ideal. Looking over the balance sheet, the company also appears to be on solid ground. Coach is posting a current ratio of 2.63 and a quick ratio of 1.76. And to top it off, the company's debt to equity is 0.002. Yes, that decimal is in the right place. So in other words, the company is liquid as hell with almost no significant debt. Take that, 2008 economy! On the income sheet, we're seeing solid year-over-year revenue growth, decreasing operating expenses relative to revenue, and a rock-solid gross profit margin. Can you smell what the gross profit margin is cooking? However, net income growth has slowed, from about 35% in the previous 2 years to about 18% in fiscal 2008. This might explain why the share price has stayed down, as investors are wary of slowing profit growth. 18%? I wanted 35. The slowdown in bottom line growth can be attributed almost entirely to increases in the cost of goods sold. It's costing Coach more money to make more money. Which brings us to common sense. Oh man, it totally should have been common sense with a C. In case you haven't been paying attention, the economy is awful right now. The reason it's costing Coach more money to generate revenue is likely a decreased demand for high-end goods. Let's see. My portfolio's in the toilet and my bank's just gone under. I wonder if now would be a good time to buy a $500 purse. By any reasonable measure, Coach appears to run a solid business, but as a seller of luxury handbags, it's a fairly safe bet that sales will be sluggish until the economy picks up. So while the stock certainly looks like a value, investors have to be prepared to weather the storm. Hold! So that's it for Coach. Tune in tomorrow when we discuss how to invest in Dauber. Oh, Dauber, you're always getting into such zany situations. See you tomorrow.
Check 1, 2, 3 for a 1K with a pre-tax match Roth IRA. You want to stress compound interest sums and invest in the best index funds. What time is it? It's time to get fiscal. What time is it? It's time to get fiscal. What time is it? It's time to get a fistful. Get fiscal. Get fiscal.